Hello and welcome to the day ahead. It is Friday, November the 11th. I'm Andrew Gagan. Well, shares on Wall Street have rallied on signs of cooling inflation, raising investor hopes that the Fed will slow down its interest rate hikes. The benchmark S&P 500 and the Nasdaq staging their biggest percentage gain since April 2020. Growth in tech-related stocks provided the biggest boost to the markets, led by Microsoft and Apple. They added more than 8%, and Nvidia, Meta and Alphabet also soaring. Amazon surged more than 12% on reports that it's reviewing its unprofitable business units to cut costs. EV utility maker Rivian Automotive jumped 17% after reporting a smaller than expected loss and a high number of pre-orders, while reaffirming its full-year production guidance outlook. Well, US consumer prices rose less than expected in October. The key measure of inflation rose 0.4% last month, below the 0.6% forecast. In the 12 months through to October, the consumer price index increased 7.7%, taking the annual rate to its lowest since February. Rents accounted for more than half of the increase in the CPI, while fuel prices also rebounded higher, and food prices increased 0.6%, which was much slower compared with prior months. Well, President Joe Biden welcomed the inflation slowdown as he awaits midterm election results to determine if his Democrats will retain control of the Senate, saying, "I will work with anyone, Democrat or Republican, on ideas to provide more breathing room to middle class and working families, and I will oppose any effort to undo my agenda or to make inflation worse." And San Francisco Fed President Mary Daly has said she feels it is time to slow the pace of the Fed's rate hikes. However, she said, "I would rather move a little bit higher and have to come back than to move a little bit less high. I don't want to be over-tightening to the point where we throw the economy into a sharp recession." Well, US Treasury yields plunged on the release of the inflation data on expectations that the Fed could slow its pace of tightening. The two-year yield sliding around 30 points to 4.29, its biggest daily decline since 2008. The 10-year was down a similar amount to 3.85%. The US dollar also fell sharply against major currencies. The Japanese yen posting its biggest single-day jump since 2015. The British pound, the largest gain since 2017. And the Aussie dollar was up more than 2% to around 65.5 US cents. In fact, it's moved even higher since then. Well, the local share market is set to rally this morning following global share markets higher. ASX futures up 2.75%. Oil prices rebounded from early losses on Thursday to rise about 1% as that tamer inflation offset worries about further COVID curves in China. Base metal prices advanced. Copper up more than 2%, jumping to its highest level since August. Nickel up more than 5%. Iron ore futures rose. And there's likely to be more action among the locally listed gold miners today, with the gold price surging more than 2.5%, taking it above $1,750 an ounce, a more than 2-month high. Silver up more than 3%, platinum and palladium up more than 5%. And the crypto market has staged a modest recovery, Bitcoin moving back above $1,700 this after the dramatic sell-off as Binance pulled out of its offer to buy rival exchange FTX.com. FTX is now looking to raise more than $9 billion US from investors and rivals to save the exchange, which has suffered from a rush of customer withdrawals. That is your day ahead. We'll see you again on Monday.